In this video, I'm going to teach you how I make over $1,000 per day on average with crypto. So this video is going to teach you the best way to trade crypto, right? There are a lot of videos on how people are teaching you to trade crypto, but I promise you, this is literally the best video that you will ever find on trading crypto. This is very easy. It is very mechanical and it works with every single coin. It doesn't matter if you're trading Bitcoin, Ethereum, DOT, BNB, Popcat. It doesn't matter. You trade whatever coin you find this pattern on. And if the pattern is present on that coin, you trade it. Okay. So this is how I make over $1,000 on average. I'm going to show you the live trades that I've taken later in the video, but for now I'm going to teach you the exact strategy because I do not want to waste your time. So what we have to do is, first of all, we have to trade above the 15-minute time frame. We are not going any lower than that, because if we do, we are going to blow up our account and this strategy will not work. Okay, above 15 minutes. So 15-minute or above 15-minute. It works phenomenally. So what essentially is the strategy? So let's suppose that I want to trade Popcat on the 15-minute time. So I'm going to see it would push to the upside or to the downside. So let's assume that price moved in one side and it made a high, right? And the high is created like this. So we have a high over here. Perfect. Price pushed in one direction and then it pulled back. So at this point, what we want to do is we have to mark out this high. So that is our range high. Okay, we want to be trading ranges. Okay, and 80% of the time markets are ranging, so you want to be able to trade those markets as well, because you do not want to wait until the price is trading in one clear direction, right? It happens very rarely. You want to be able to trade ranges, and I'm going to teach you exactly how you do it. So we want to identify the range high and range low. Now we have identified the range high, but the problem is, how do you actually identify range low, right? This is the biggest problem that people face with this strategy. I'm going to teach you the mechanical way to find range lows so you never lose. Of course, you're going to lose, but you never fake out, right? You never get faked out. So let's assume that we get a push to the upside and then we get a push to the downside. And I have a question to you. Is this range low? Would you consider this as range low? My answer to you is no. And I'm going to tell you why. So what you have to do in order to identify the range low, you have to look for a market structure shift. So we have a lower low, lower high, lower low, lower high, lower low. And then we have a shift in the market structure. We broke this lower high. So this becomes our range low. This low caused a market structure shift. This low right here, this is the one that caused a market structure shift, right? So this becomes our range low. So at this point, we both have the range high and range low. We have an established range and we can then trade from here onwards. So once you have the range high and range low, what we are simply looking for is for price to either take out the range high or range low. Okay, so ideally, and this is not necessary, hear me out, this is not necessary, but ideally, if we are bullish, right, if we are going up, ideally I want to see the range low get taken out first, because then we can continue trading with the trend. However, in most cases, you're going to get the range high taken out and then range low and then proceed up, right? So it doesn't matter what the trend is, but it will increase your probabilities to around 5% or more if you trade with the trend. And if you see this pattern where price takes out the range low first and then moves up, right? But it is not necessary, as I said before. So let's assume that the range high is taken out, right? So this is all on the 15-minute time frame. Remember that. So price goes up and it takes out the range high. Now, at this point, what I'm waiting for are two steps, okay? So the very first step is that I have to look for a market structure shift, okay? So it can be presented somewhere around here. Now, you can see we broke this low, right? And that is called a market structure shift. Now, the second step is I have to wait for price to close back into the range. So I want to see price come back into the range. I do not want to see a market structure shift somewhere around here and the price is still not inside the range. That is not valid. When you get a market structure shift, you have to make sure that price closes back below the range. So this is range high, price comes back and closes here. Now at this point, all our criterias are met and we should be good to take our trade. But the most important thing, the most important part of the strategy is risk management, because without that, this strategy will not work. So you have to listen to me carefully. And before you do that, please hit that subscribe button, please hit that like button. That would help this channel a lot. So once you get a market structure shift and price closes back below the range and we have our range low as a target, you want to simply take your entry from the auto block. So consecutive bullish candles to the upside, that is your auto block. So this would be your entry. Now from here onwards, what are going to be your take profit levels? So what you want to do is you want to choose Fibonacci retracement, right? And you want to use it from the range low to range high. So you can see I have around 4 levels here. So 0 level, 0.5 level, 0.79 level, and level 1. So you can simply copy these numbers and you can basically disable -4. But these are the 4 numbers that you should focus on. So let's assume you get your entry here, right? Now, when price comes to the 0.5 level, that is from where price can potentially reverse. Okay, it is not confirmed, but there is a chance. So what do you do at the 0.5 level? First of all, you take one profit, one partial. Okay, it could be 20% of your position or 30%. I recommend go with 25%. So close 25% of your position at 0.5 and go break even. That is step 1 of this risk management strategy. You take your entry when price comes to the 0.5 level, you close 25% of your position and you go break even. So if price reverses from here, at least you made some profit. And that's what matters at the end of the day. You closed your computer or mobile phone with some profits, right? But most likely price will go to the range low, because that's how whales need liquidity. The whales that have like billions of dollars or millions of dollars, if they want to trade crypto or low cap coins or whatever, they need liquidity in the the coin or the total crypto cap to move the coins, right, with this huge amount that they're trading with, 1 million, 10 million, 15 million. So this is how they manipulate the markets. So your first TP at 0.5. Now, when price keeps going down, this is second potential level from where price can reverse, 0.79. So you have to be very cautious around this level. So what I recommend, you close another 25% of your position, right? So basically you close 25 here and you close 50% of your entire amount at 0.79. Okay, 0.79 is where you close your entire position. Sorry, 50% of your position, not the entire. So when you have done that, you can do two things here. You keep your stop loss at break even, or you trail your stop loss above the 0.5 level, above the high that is present above the 0.5. So over here, we have a high that is present just above the 0.5 level. You put your stop here. Now, that's two things that you can do. The result will be similar in the long run, but that's really up to you. So you can take, so you have taken one partial, two partial, and then the final TP is going to be this one level. But what I like to do is, if I see if the momentum is to the downside, right, and price is likely to go down, I will hold the trade and I will try to trail my stop loss. I want to maximize the profits. But if you want to keep things mechanical, you close your entire position at this level. And this is basically the entire model. I'm going to show you guys some examples and the live trades that I took. Similarly, it would be the same case for, a range low. So let me just delete this. Okay, so we have a push to the downside. We have established range low. Price pushes up, higher high, higher low, higher high, higher low, higher high. But then after that, we get a market structure shift. So that becomes our range high. Why? Because this range high caused a market structure shift. And I promise you, when you get this setup where you get a market structure shift and price closes back above the range, you take your entry from the auto block and it's going to go towards your target level. Let me give you guys some examples and show you some live trades examples as well. All right, so here is example one, and this is the trade that I took on my account. So I'm going to break it down for you. So we have a push to the upside, right? That becomes our range high. We have an established range high. Now, price pulls back, we have a lower low, lower high. Then we have a lower low. And then afterwards, look at this high. It got broken by this low. So after this low was formed, we had a market structure shift. Lower low, lower high, lower low. And then we have a shift in the structure. We are looking within this range for a market structure shift. And you can see we have a structure break right here. So once that happened, right, this becomes my range low. Very simple, right? So we have now range high and range low. So then afterwards, what I'm doing is I'm looking for a market structure shift. So we have a higher high, higher low, higher high, and then we have a market structure shift. And I want to see a body close below for me, in order for me to consider this as a valid market structure shift. And then what do we have? We have consecutive bullish candles to the upside. That is our bullish auto block. So I'm just going to mark this out. I took my entry somewhere around here. So if I turn on the executions here, you can see I short it somewhere around here and I took my profit at the range low. Now note one thing, if price reaches the 0.5 level before your entry, then the setup is valid, okay? It doesn't matter where price goes before your entry, but once you are in the trade and then price go to 0.5 level and 0.79 level, then you have to apply the risk management techniques that I taught you before, okay? But if you are not in the trade yet and price goes to 0.5 or 0.79, the trade is still valid unless price takes out both sides of the ranges. So we have range high, it's taken out, range low taken out, then the setup becomes invalid if you're not in the trade already. Let me show you guys the live trade that I took in the next example. Okay, so here is example 2, and this is a very choppy price action. This is what we ideally want to see in crypto world. Okay, now this works with Forex and indices as well, but I do not recommend it trading with Forex and indices at the moment because I have so many models for Forex and indices. Stick with them. You do not need this to trade Forex or indices, but this is literally the best way to trade crypto. I trade this every single day, and basically this is like my bread and butter for crypto. So you can see we have a push to the upside and then we have a pullback. So right away I have my range high marked out, right? And then what I'm looking for is a market structure shift to the upside that forms range low. So we have a lower low, lower high, and then a lower low. You can see we have a lower low, lower high, lower low. And then afterwards, what do we have? We have a market structure shift, right? So this low caused a market structure shift to the upside. So now this low becomes what? Range low. So we have a range high and we have a range low. Very simple. Then price deviates, sweeps the range low right here, pushes back up above the range and gives us a market structure shift right there. Then we have this auto block resting around here. So if I turn on the executions here, you can see I entered somewhere around here because I saw the setup a little bit late. So you can see my entry was here, somewhere around this level, and you can see price pushed up, boom, boom, right there. My stop was somewhere around here. Ideally, you want to put your stop here, but I came onto the charts a bit late and I saw the price was still somewhere around here, so I longed it, and you can see trade worked out perfectly, and then afterwards price just went where it wanted to go. Let me give you guys some more examples. All right, everybody, so here is another example looking at SHIB USDT on the 15-minute. Now you can look at 30 minutes, 1 hour, 4 hour, daily, weekly, monthly even. It works on all time frames above 15 minutes. It does work on 5 minute as well, but I do not recommend it at all because you're gonna lose money. I can't trade it on 5 minute, man. So if you think you can trade on 5 minute, then good luck. So just do what I do because I spend way too much time on testing these things out, man, and I do it for all of you. Okay, I could charge thousands of dollars for this because if you go onto YouTube, no one is teaching you this exact method, but I'm doing it because I don't care. Okay, so we have a range high, price push in one direction. That is our range high. Now we are looking for a market structure shift. So we have a lower low, lower high, lower low, lower high. But then if you look closely, we failed to sweep this low. So we still don't have a valid range low. So lower low, lower high. And then we have a lower low once again after we broke the structure. And then what do we have here, guys? We created this fractal high and that gets broken. So that is lower low, lower high, lower low. And this becomes our range low. Okay, so here we go. Very simple, very mechanical. So we have range low, range high. Price goes up, takes out range high, right? You can see higher high, higher low, higher high, market structure shift, close back into the range. We have this auto block right here, right? Over here, that is your entry. So your short position goes here, stop right above the high. You take your profit at the range low. And then of course the risk management strategy that I taught you. So if you can see right here, right? Price after entry goes to the 0.5 level. You go break even with one partial. Then price goes to the 0.79 level. And then it goes back to your TP level. So you can see how easy it is to trade this model. It is not complicated at all. It is literally the best way to trade crypto. I really hope you guys enjoyed this video, and I have a very good news for you. In the upcoming days, there is a brand new crypto signals service that I'm starting, and of course I'm doing because the signals are worth it. I'm not gonna put my entire brand on risk just to give you bad signals. Okay, this shit works. There are other ways that I trade crypto, and I want to have a service which is like beneficial to people who cannot be on the charts 24/7 and they're just looking for direct signals. But it's coming soon in the future. I'm not gonna talk about it that much in this video, but when it is out, I'll let you guys know. Anyways, this is pretty much it for this video. I really do hope that you find profitability with this model. I'll see you guys in the next one. Goodbye.